All right, everybody, today we're going over why your financial advisor does not want you to do Roth conversions. And yes, a little controversial here. We're going to get into why the advisor might not want you to convert your money because it actually can result in lost revenue for that advisor. We're going to get into why and kind of how that works. So let's imagine someone has $1 million portfolio. And if you want to convert money, you have an IRA account, right? And you want to convert that money over to a Roth IRA. And maybe it makes sense for you, maybe it doesn't. But if your advisor is looking at that and they are not too keen on actually helping you from a tax standpoint, they just want to invest your money and that's it, they're going to look at that and go, well, if you convert money to a Roth, there's now less money invested in the market. Why? Because we pay taxes on that money. So if you convert money in the 24% tax bracket, what ends up happening is that there's less money to actually manage for the advisor. And because of that, if you look at like someone's charging 1% a year, right? If you Google online the average advisor fee, 1% a year pops up. So if we use that number, 1% a year that they're charging for their clients, and their clients decide to convert money in the 24% tax bracket, that will result over a 20-year time frame, a loss of $105,000 in revenue for that advisor. It's a big deal. And imagine they do that for every single one of their clients, and they have, call it 100 clients like this that have $1 million in their IRA that want to convert their money. This is not a small deal, right? You add 2 zeros to that, right? And all of a sudden, we're looking at $10.5 million in lost revenue for an advisor if all their clients had $1 million in their IRA decide to convert in the 24% tax bracket. Not small potatoes by any means. That's a lot of money in lost revenue over a 20-year time period. If you divide that by 20, that's $500,000 loss per year in revenue for that advisor. So why am I telling you this? Well, some advisors, they know that number. And they don't want you to convert your money, even though maybe it does make sense, depending on what your goals are and what you want to do. So I'm going to take 2 minutes to kind of describe like what does make sense for Roth conversions, why it might make sense for you, and why you should maybe consider it going forward. So Roth conversions. Here's the thing, folks. If you are not going to use your money, and you're earmarking this money for your kids down the road, it can 100% make sense to convert the money to Roth. Like 100% makes sense. Why? Well, odds are you might be in a lower tax bracket than what your kids might be in the future. And if tax rates were to stay the same, that will probably be the case. Your kids will probably be making money. So think of your kids now, if you're in your 60s, they're in their 20s, and when you pass away, maybe down the road, 20, 30 years from now, your kids will also be 20, 30 years older. They'll be in their 40s and 50s. When did you make the most amount of your money? Probably in your 40s and 50s. Right? So your kids will be in higher tax brackets, and when they get your IRA down the road, now they're going to be in a higher tax bracket. For those who don't know, an IRA, you have 10 years to pay the tax on that, and it's on top of the earned income you have coming in already. So if you plan on giving this money to your kids from a tax standpoint, a Roth might make a lot more sense. Because a Roth account, if you inherit a Roth, you can leave it in there for 10 years. And you could actually grow that 10 extra years tax-free. That's the component no one really talks about, is that extra 10 years of tax-free growth can make the Roth a much better decision compared to the IRA. Okay, so if you're thinking, hey, this money is going to the kids anyway, like we're not going to spend this part of our IRA, it's going to the kids, a Roth conversion can make a lot of sense, especially if you're in a lower tax bracket than what your kids might be in the future. If you're in the 12% bracket or 22, and you know your kids will at least be in the 22 later on, converting it makes sense. It just does. All right. Now, if you're in the 37% tax bracket today, and you feel like your kids will never get past the 12, That's where, all right, maybe it doesn't make sense. Again, even then though, it still could. But run some numbers on it and kind of see. So giving money to your kids is one kind of easy, hey, you might want to convert your money to Roth. The other side of it is your RMD. For a lot of people, and this can happen, your RMD will cause your taxes to go higher than they probably should. We do see this happen a lot with more higher net worth clients that might have, $1.5 million to $3 million in their IRA account. So what happens with an RMD? Well, a lot of these people, they got this much money because they don't spend a lot. I met someone the other day, they have $3 million in their IRA, but they spend $70,000 a year. And guess what? His Social Security, him and his wife combined, will be around $65,000. Meaning, and he doesn't plan on spending more. He's happy with his lifestyle. He's going to take $5,000 out a year from his $3 million IRA. That could be a problem. Why? Because when he turns 75 in the future, when his RMD starts, he's going to have to take out a lot more than $5,000. His RMD, if it stays at $3 million at 75, technically that's going to be around $120,000. He doesn't want to spend that much. So what can make sense for that person? Well, they might want to convert their money. They might want to actually take some money and convert it over to Roth while staying maybe in the 12% tax bracket if they're married, right? Convert it over inside that 12%. Because then what will happen, instead of leaving it the same, their tax bracket will look like this, right? Because their RMD is going to increase over time because they're not really spending their IRA. So their taxes will increase. And they might even end up in this 37% tax bracket down the line. They could. The IRA keeps on growing. Where instead of doing that, what they could do is pay a little bit more taxes today, right? And they try and flatten the curve. Where now they're going to stay, whether it's 12%, 22% bracket, whatever that may be, you try and stay inside that bracket throughout your whole entire lifetime. You do that by converting money earlier on. And if you keep doing that over time, eventually you might actually fall to a lower tax bracket because your RMD gets low enough. Okay? So different kinds of people might need to do Roth conversion for different reasons. But ultimately, you need to look at is your situation and what you're trying to do. Because you're right, for some people, if you're going to spend a lot of your IRA and you're going to use it for a lot of your expenses, it might not make sense to do Roth conversion, right? It still could, right? You might save some money on taxes by doing so, but it might be a fine line. You got to run the numbers on it and see. For other people that are in these situations, I think it becomes a little more clear of like, yeah, we're giving money to the kids. A Roth conversion makes a lot of sense. You may say, I'm in a higher tax bracket, I pay taxes on it. Well, you can use the money from the IRA to pay the tax. If you're over the age of 59 and a half, you could do that. Right? There's no penalties for doing that at all. So $1 million in your IRA just becomes, $800,000 in your Roth, for example. And that's going to grow and be for the kids tax-free down the road. They'll get more money that way. They will. Run the math on it. There's extra 10 years of tax-free growth. They will get there. And then for this situation, if you're making too much money today, right, and you're not going to spend a lot, the conversions can help you avoid a higher tax bracket down the road. And even potentially put you in a 0% tax bracket. And for a lot of people, sometimes that 0% tax bracket, if they're thinking, oh, I don't have a ton of money today, well, even if you have a couple $100,000, sometimes by converting that to a Roth, does a couple of things. One, it might help your Social Security now become tax-free, right? Because your Social Security, if you're in a lower enough tax bracket, doesn't get taxed. And also, your capital gains, right, can become tax-free, right, for over certain limits. So depending on your situation, conversions can make sense. Is your advisor always going to say that? They might not, because they're not profiting off doing these Roth conversions. They're just not. So keep that in mind. All right, when someone says don't do a Roth conversion, are they actually incentivized to be telling you that? Or are they just giving you the advice that they want to tell you because they're going to profit more by giving your money in the IRA versus a Roth? Know what's going on there. Get that second opinion if you have to. Any questions, let me know. Comment below. Subscribe to our channel. Talk to you folks soon.